Okay, Ali. So yeah, you sent this last night. Just getting back to you now. AAVE, is there something going on with AAVE? You know, the last 10 days somebody's took out 40 million, took it off exchanges, which is a great sign. $2 billion market cap, so there is upside. Yeah, beautiful. Let's look at it. Now first I want to bring you back. Now a lot of people will not remember AAVE back in these days, but if you find the right chart, and it's the USD chart, okay? Yeah. Now this was on my chart. I have not drew this there now. This is already on my chart from well, I don't know, maybe last year, 2 years ago. I'm not too sure when it was, but I've drew that this is an alt season, right? This is a 3-day apex. This is moves up. These are apexes building. These are extremely powerful. We are starting to see these develop all over the market. Now, will they all be as good as AAVE? No, because AAVE we know is extremely powerful. And you can see there 21. I can't even read it. 213,398%, and that's not even, yeah, so 200,000%. What's that, 200x or whatever it is? So, you know, are all the coins going to be as good as AAVE? No, right? But we are seeing developments that the apexes, 3-day apexes, are developing. And you know, I always say don't fight the apex. It's the most powerful pattern I have seen in the last 17 years of trading. When you can understand an apex developing, it can be life-changing, right? And I don't mean to say that lightly, and I'm not trying to create FOMO or anything, but it's important to understand them. So I want to go through this one first before we look at the new price action. Now in an apex, right, you get a bear market, right? That's normally what you do. The best apexes form when you create a base, when you create a long base. Price needs to safely get above the white 100 moving average, and price needs to hold above the white 100 moving average. That's extremely important. That is your point of failure. Price needs to hold above the white 100 moving average. As long as it's holding above the white 100 moving average, it is bullish. It is bullish accumulation. Price should not break down below it. Retests, as you can see here, are fantastic buying opportunities. Okay, so the next point is the purple moving average needs to drop into price. Now, I should say this again. If you've had a bear market, the purple then needs to drop into price and gets underneath price and starts supporting price. When you have the purple and the white supporting price, it's extremely bullish. But where do you want to buy? Well, if you understand apexes, you want to buy below the white 100 moving average in anticipation of this move up. Okay, that's important. It's risky. It's more risky, but the higher the risk, the greater reward. Right? There's 25x, and if you buy above here somewhere, for example, or whatever, you can see that's only a 6x. Okay. Yes, it's okay to be buying up here. You know, that's safe money right there, safer money right there. But you can see the difference between buying down here and buying in the apex. Buy below the apex if you understand it, in anticipation of a breakout of the apex. The market is developing. The other thing important thing to note is look at the deviation. The deviation below the lows can be extremely powerful. Was there a clue here? Is there a clue in this volume? Well, yes, there is. You can see the failure here. That's a failure above the highs. But what is this here? This is a giant red candle. Look at the bear market. Look at the bear market. Look at the there is no giant red volumes the entire bear market, right? Nothing. There is nothing there. We got one here. What do you do below the large red volume? It's not perfect on this occasion, but what do you do below it? You take note. You want to accumulate below it, right? So you got this large red volume, and if you started to accumulate below the first large red volume here, you're buying into the real area where it starts accumulation. It's a sign. In this occasion, it wasn't flawless, giving you the dead low, but there was a deviation here to help with that, and especially when you broke up above it. So anyway, so you can see right here that this developed a very powerful pattern in the apex. Now, I'm just going off topic here right now because I was looking at a coin, and this morning, right, I seen a coin this morning, right, and this is front, right. Look at front. Front is not identical, but it is starting to kind of form a similar-ish pattern. It's not perfect. It's a smaller coin, but you can see that it's forming this 3-day apex, and if it continues to consolidate here into next year, there's a real possibility that this could then run. It's not perfect. It's not the same, but it's just something I seen this morning that was fresh in my memory. Something to keep an eye on. But you can see that the development in and around here, this can take time. I actually should have drew that back here. This can take time, right? That's a 3-day chart. You can see that this started to break up here, and that's what we're doing right now in the market. We are getting these breakups. We are getting these breakups. This is where we're at in the market in theory, right? Right here. That's where we're at. We are just breaking up above these. And to be honest, I may go as far as saying that we are here. That's where we are in the market in theory. We need to hold above the white 100 moving average on a 3-day chart. And we also need to look for back tests of the white 100 moving average or in and around it for buying opportunities, if you've not already accumulated some down here. Now, there's a lot of things to know, not to know, but to help you understand if it's going to go parabolic. Well, one of these is if you break the neckline. If we have necklines, and if the neckline is fairly low and you eventually break it, you break this neckline, and it's almost as if, because these orders are so long ago, it's almost as if they don't exist, okay? Because the space between here and here allows the market to go parabolic. Most people have already capitulated all down here, right? So it's important to understand that. So it's almost as if they don't exist because there's so much time, there's so much capitulation. This is a time-based capitulation that can then in turn, cause huge upsides. Now also, right, finally, before we get to the real price action, sorry for the long video, but I think it's important. It's important to remind people. It's important we are potentially moving into these breakouts of these patterns and accumulations of these patterns. There is a few other little aspects that it's worth noting, right? Also, we've talked about these falling wedges. When you get these falling wedges, I made posts about them all last year, that we are creating falling wedges like we done back in 2018 and 19, 2018-19, when you form these patterns. Well, look at these breakouts of these patterns. We are getting the breakouts of these patterns right now. This is what's happening in the market, in the overall market. We are doing this pattern right here. So what it's saying is these dips back down are still buying opportunities. So there's no real need to FOMO up here. There should be dips, okay? It's still okay for accumulation. You can buy right here, but if it does go lower, it's good to be adding. That's what the theory is saying, okay? But look then, this apex is already broke out, okay? But if you understood this, you can get in here, or you can get in here before the whales. Where did the whales enter? Well, the whales entered right here on breakout volume. You can get in. See, the whales have so much money that they wait for volume to start to increase a little bit. I know right here's a flat bit of volume. That's something else I should talk about. But whales do not buy at the very bottom. They can do, but some whales like confirmation that this trend has already started, that this trend has broke out, and you can see what happened here. The whales bought here. This is breakout volume. When you get breakout volume here, then it's okay to be buying as well. If you missed the boat, or even if you want to add to your position, right, you can wait for breakout volume. When you get breakout volume, this is confirming the whales are on board. Yes, it moved up, and yes, it came back down. Maybe you're on a bit of a loss again, depending on where you bought. But you can see what happened. The trend was true, and volume precedes price. This entire accumulation and breakout phase, it is a process, is what I think I'm trying to say. But there's a lot of clues. Now, one last thing before I move to the current price action, and sorry for the long video, this, right? It's very important also to be watching for, there's an increase in volume, and then you get nothing. You get flat, you get nothing, you get low volume like this, right? This is a sign. This is a very good sign, right? Why are there no sellers here, right? Why is this volume flat? Why is there no sellers? Why is there you know, even here, look at this. This is you can look at these and you can trade these. These are very important, very impressive. You can see this, and you start to break up. Look at the volume uptick there. Now it's subtle to start with, but this one's not subtle, right? But that's very important. When you get flat volume like that in a big breakout, that's extremely important. Dips on this circumstances are buying opportunities. It's important to look out for these going forward, because we will encounter them. After we get these breakouts, the market's going to go into a lackluster period where you get these drawdowns, you get these pullbacks, and the volume is dead. The volume is waiting for buyers. There's no huge sell volume. Like you can see up here, this is real selling. Look up here. This is real selling off the top, right? But from then on, there's not much sellers, but there's also not many buyers. Okay, 11 minutes, bloody hell. Okay, but it's important, and I hope people do watch this video, because we are moving into it now. So here we go again. You know, if we count this from May, you know, there's May again. We are moving with a year and a half of a base here on AAVE. So these people are buying in it. Now AAVE has had a fake out, right? This is bearish currently, so you got to be careful on this in the near term. That whales are not always correct in their buying. They don't care about the exact buying price. Of course they would like to nail the bottom, but the fact of the matter is that whales don't always buy the bottom at all. Sometimes, just like Michael Saylor in Bitcoin, he doesn't care. He FOMOs in and he buys and he accumulates. So if this drops back down here, they will probably buy more. But they are believing at this point in time that this is the start of a breakout. Even if it pulls back here, that's okay. And you know, then they don't care. They want price to come back up. Here is your next pivot, right? That's an important pivot. This is a falling wedge breakout, right? And this is trying to break out. If you remember what we just talked about, you get breakouts of the falling wedge, and there was pullbacks right back into it. Let me clean this up a bit. So we're forming almost an identical process of what we did back in 2018 is what I'm trying to get at. You get these large falling wedges of bases that are building into 3-day apexes. As long as you're above the white 100 moving average, you are bullish. These breakouts can, like last time, can get pullbacks. Okay, so if we go back here, you can see this breakout pulled back perfectly into the white 100 moving average again. So there was real selling volume here, large red volume here, that pulled the price back, and then volume died off right into the white 100 moving average for a buy again. So if we continue to look at this, now I'm not saying yet that this is definitely pulling back. We need to watch this. It needs further investigation. But below here, below this previous high here, this is a red selling candle, right? This is saying that there is a little bit more downside at least before any attempted pushing higher. This is a 3-day, so this is a rejection on a 3-day, implying that there can be more downside. Okay, so there's a little bit of FOMO, but all of these green candles, green weekly candles, into close to a double top, right? So it's okay to get some selling here. So far it's okay. It's also a bearish 2-week stop hunt at this point, right? So it definitely should be noted. So below the stop hunt levels in the short term, you know, you do have to be a little bit careful. That whale, or whoever it is, but the 9th largest holder in AAVE, he sees this breakout. There is a new 9-week candle in 2 days time, right? In 2 days time. So if this is going to be extremely strong, well, breaking up into this yellow moving average can lead to further upside, right? This can lead to further upside. I would expect some sort of wick to the downside or whatever, right, to create that wick. But if we get that wick to the downside, it doesn't have to be that size. It can be smaller than that. It can be up there somewhere. But if we do get that small dip to the downside and pop up and flip green, that's a buy. Just like here, when you start to break out, price can get continuations. There wasn't much wick there. There was a small wick there. This is a very strong candle. So that whale is buying in anticipation of possibly further moves up. You probably would think that if there is a dip back down to here, these are buying opportunities down in here. If it does get back there, that whale is probably going to buy more for the continued upside. This in theory should be a breakout candle. This is also a very strong 6-month candle. These 6-month candles usually result in more upside. Okay, this usually continues on to the upside. That is a 6-month candle that has flipped green after being bearish. There is always the possibility you get wicks down here into that, but these are often bullish setups, right? They can go higher. So even if you don't trade and buy into the FOMO up here, there's a possibility you can actually buy lower into a new year. The worry about that is obviously if you wait, you may miss it if it goes into extreme FOMO. But the overall chart is implying bullish. So there is near-term FOMO where there's 3 candles to the upside and a bit of a rejection here. So I don't think there's any need to FOMO into this right now, at least until the 3-day chart provides us with more clarity. There's a rejection here, and these rejections imply at least another little bit of downside, at least a little bit. But I made this video because this setup is applying to a lot of the market right now, and it also kind of implies to here, right, as well. This needs to hold above the white 100 moving average. If we get dips back to the white 100 moving average like we did last time, they are buying opportunities into the white 100 moving average before the real move. That's a buying opportunity, as long as the white 100 holds. We may not get that deep, but you know, I'm just saying it's the main point on the chart that needs to hold. So between here and here are buying opportunities. These dips should be buys, and we can follow a new 9-week candle and look for these dips and try and find that low.